The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting for Larry. Larry's away this week. Hope he's doing well. And it's my pleasure to be here. I'm usually here Monday through Friday. My show is 11 o'clock till noon Eastern Time at 877-927-6648. And you know what? It's the same number, 877-927-6648. Love to hear from you. I want to do something real quickly here. I'm going to do this. I meant to do it in my show. I didn't really have time. I had some callers, so I spent time. But I'm just getting right to it right now. The Dow's up 156 at 16,222, and the S&P's up 15 at 1856. And gold, I may as well just quickly mention, gold is down $1.70. I'm expecting gold to pull back here. I don't know if it's just a quick 1 to 3 day pullback or whether it'll be a little more meaningful, but I'm anticipating some kind of a pullback in gold as the market kind of meanders higher. Well, it didn't meander this morning, it rocketed, and now it's going to meander into tomorrow, trying to hold at certain levels. By Wednesday afternoon, I think we might be starting on our way down again. But look at this. In the Chapman wave methodology, oh, I didn't do this earlier on. Yeah, let me just mention this right now because I'm bound to forget. In the Chapman wave methodology, in my CD introducing the Chapman wave methodology, I have a particular way of looking at the market. I find the lowest, most identifiable low bar, like it does in this particular slide. This is slide 54. It's about the S&P. This goes back to, I think, 2005. Find the lowest low bar, and then start identifying each successively higher peak. It goes peak A, B, C, D is the fourth highest peak. That's where you've got to be a little bit tentative because you could have a bit of a pullback. That's where you want to raise your stop or take some profit. And very often at D you can have a sharp pullback. But look at many stocks that have done that. But you can, in fact, go on to an E and an F. So this goes to the sixth highest peak, peak F. But wait a minute. How do you know what to do and when to do it? Well, something that can really help you is the moving average convergence divergence, the MACD. And right here you'll see that the MACD, I've got it circled with a dash circle over there. That crosses positive with that fast-moving average, the light gray line, and the stronger black line is the slow-moving average. And it crosses positive, and what happens? What happens is that the price moves higher. Now, look at this. You see the way the little wiggles and stuff that go on here with that fast-moving average? Well, wait a minute. What does that resemble? That resembles, it's very easy, because what it resembles is, in fact, the price. Look, see that little guy there? You see that? You see how it gets a little bit shaky there? Well, look, from peak C to D, took about a couple of bars. D was only nominally higher, closed at the low, made it kind of a U shape, and then it went strongly to E, and that's exactly what this fast-moving average does. Why? It's a look-back period, and the look-back period is the 9-period moving average differential. And that is following the price. And then when you see a divergence right there with that fast-moving average is not as high as it was at peak E, you say, all right, but watch out. Wait a minute, there are other tools. See the slow stochastic. There's a slide 54 of my CD with 476 slides on. Have a look at this. The stochastic, and I'll talk about what levels I want to see it hold. I don't believe in this oversold business. Yeah, oversold is in fact a term that you can use, but not when the price of a technical tool you are watching is floating and heavily into an area that says as long as it holds here, that's perfect. That's what you want. Then what you want to do is you want to see on each successively higher peak. Have you got a confirmation or have you got a divergence between the slow stochastic? So I'll be teaching that on Thursday night. It'll be Thursday night right here. Let me go back one. And this is right there on the front page. Go to the front page of TFNN. It says subscribe a webinar by Basil Chapman. Get the opening call. That's my daily comprehensive service. You get a whole month. It's usually 2 weeks. This time we thought this is such a perfect time in the market to be able for subscribers and, of course, my potential subscribers to be able to learn the techniques that we do, and with the webinar to be able to follow it as I will show them every single day. Well, what's important is that if you sign up for this, you'll be able to get my service, and you'll be there for the webinar on Thursday night on the MACD and the slow stochastic, free to my subscribers only, and it's going to be very perfect timing for that. Let me explain why. Here we go. American Express trading at 90.97, up 80 cents. But it made a peak E top with diverging technicals, and the technicals are looking very poor. When it made the high of the 7th at 94.35, now at 91.58. Look how poor the technicals are on the daily. The weekly deflected lower. That's not good in the weekly chart. Stochastics under 80% is 78%. So I'm watching this potential peak F. It could turn out to be a brand new A if we start high. If American Express pushes into the 92.90 to the 93.10 area, just below the all-time high that it made recently of 94.35, I'm going to say, whoa, you've got to respect that. But right now, the monthly chart is in D. Remember I spoke about D being an important peak if it makes a peak next month in April? So we're watching that. Look at Boeing. Boeing having a nice bounce there, up 234 after just a horrendous, since it made the 144.57 high on the 22nd of January. It opened at a round number, 142. I always look for round numbers and I check them out closely. The next day it had 143, round number opening. And now it's gone from peak E at 144, plunges to the 118s, 118.77, has an arch formation, and it's a peak D in the weekly and a peak E in the monthly. Hey, not good. Caterpillar, CAT. Have I updated Caterpillar? I don't think so. Yep, I have. 98.26 was the high just recently on the 24th of February. It's been going sideways to down. The MACD and stochastic are very poor, but the price is holding quite nicely. The weekly has made a potential peak F, and the daily is, the monthly is in a new leg B, but way below the all-time high of 116.55. It's trading at 95.84. So I'm watching Caterpillar very closely because it was a very weak stock, and now it's kind of holding okay, but it's still in a down mode at this particular point. Look at Cisco. Oh, man, Cisco. Oh, a good day today, finally. It's up 18 cents at 21.54, but it made a peak D, round number high, 23 back in January. The weekly chart has made a peak F, doji, top, with a 2-bar, Chapman wave 2-bar sell signal. And that's gone all the way from, did I type that in? 26.49. Most recent low was in the low 20 area, and now it's at 21.55. And the monthly chart has made a peak D. It's taking its time here. Big consolidation for Cisco. I could just go on and on. CVX. CVX is Chevron Corporation. In a sideways move, but way below its all-time high of peak F top back in, was that July of last year, 127.83 with a low of round number 118.00. Plunges down to the 109 area, 109.27. Now it's trading at 115.17. In a sideways motion, stuck between 118 and 112 for the next month or two, maybe. DuPont, going alphabetically. Alphabetically by symbol. Now, DuPont made a peak F top. It was it had a fantastic run from the 59 area all the way to the 67.95 high. Now, what's really important about this is that there's a potential for a peak F top in the weekly. I don't know yet, but there's just the potential for that. And while we're looking at this, you're looking at a chance of a leg E to a peak E if the monthly chart in April does not take out 67.95. So far, it's a high-level consolidation. Nothing very negative about it, other than the stochastic and MACD and the daily are pulling back quite sharply. The weekly, though, the technicals there are holding well. That's why the price is holding well. Now, I wanted to do one other thing, is I wanted to show you a very important stock because it's coming up to the spring season. I don't know whether Disney, on a cyclical basis, has a very good run from now into the summer time, because the chart itself has just been going straight up in the monthly chart. And in fact, May last year was sideways to down into October, and the previous year, that's 13. In 12, it went up, and then September was just a little bit of a U-turn. So I don't really see a cycle here, other than to say that Disney is holding very well closer to its highs at 81.30. The all-time high was just recently at 83.65. And that made a peak E in the weekly, but that's a peak E, and this is a peak D in the daily, and leg D. So this is, got to be a little careful here with so many of these stocks, because if they turn down a little bit sharper than the recent move in the next phase down, in other words, if Disney takes out 79, round number 79 in the next week, that's going to be very negative, because probably it's going to make that arch formation, even a capital A, up and down. So I'm watching it. But if Disney by Wednesday is at 82.50, I have to respect that and say, hey, that's good strength. General Electric today having a nice day. Was earlier. It's up 28 cents at 25.40. But this chart is not saying good things to me. I'm very nervous about it. Look. The up channel, it can't get away from this trend line. I don't think I'll have time for this in the webinar on Thursday. I might just shoot a couple of these things. It only takes a few seconds to explain. It takes a little longer to discuss it, but just to quickly explain what I'm doing for a trend line is fine. This is called the Chapman Wave Inside Track. This should be, in fact, a buy zone. But boy, a buy zone, it's had so many opportunities to break out, and it can't get above 26.35. If General Electric cannot get above 26.35 by a week from this Friday, but instead we suddenly see it trading at 24.79. It's at 25.40 right now. That's going to give that arch formation and say, oh my goodness, the wick of this candle, or the weekly candle of the 7th of February with a low of 24.32, it could test that. If it breaks it, that'll be the first really bad close, if it's a weekly close, on that weekly chart, and say, oh man, what was support becomes resistance. That's the rule of the game. So I'm watching this really closely. It's made a peaky in the monthly. Also had a very important 9-period exponential moving average, a trend line support, which it held, just held Friday and Thursday. But I'm looking at the monthly technicals, and they're starting to deteriorate. So I'm just going through these charts alphabetically. There's no real order other than that. And they are saying maybe a high-level consolidation at best, but many of the stocks are looking quite poor. I'll be right back. Basil Chapman sitting in for Larry, and we'll look at some of the currencies as well as the commodities. Dow's up 192.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for the one and only. You've got it. You've got it, Larry Pesavento. So, Dow's up 190, S&P's up 18, and we've got online John in Philly. Hi, John. How are you?
Hey, Basil. Thanks for taking the call, sir.
My pleasure.
I wanted to ask you very specifically about the Chapman wave and legs A, B, C's, and D's.
Yes.
On the 30-minute chart for the E-mini June futures, as you rightly pointed out, Sunday night they made a low like right on the open the first hour near 7 p.m.
Right.
Then overnight, between that moment and this morning at 10, there were two good surges showing up on the 30-minute chart. And I have labeled peak C being in place at the 1855.75 high.
Okay, give me 1 second. I'm going to get the 30 minutes. I just did the NQ, which is in D. Let me just do the ESM14, and I'll type in from the low bar. I can put an up arrow because we know that it went up after that. That's easy when you're looking back. You're always 100% correct when you're looking backwards, but it's looking forwards that's always the challenge. So 34. So this is A, B, C. Oh, that was a C. I must say that. Okay, we're at peak C in the E-mini 30-minute chart, parallel highs, and that really does suggest that there could be a spike above 1855.75 based on that 30-minute chart. We'll see, because the stochastic's fading miserably, but the MACD is still holding.
Here's my very specific question.
Yes.
I'm only using the June E-mini futures as an example.
Okay.
To have you share with us your experience with markets and the Chapman wave behaviors.
Okay.
In this particular case, you've got peak C, and I'm looking at the Tiger's Den, so thanks for showing that, and a very strong, powerful MACD indicator.
The MACD, the moving average convergence divergence, the parameters are 12, 26, and 9. 9 is the differential between the red line and the green line. The red, this is the look-back period, and the 26 period, just from between 12 and 26. And this, they created a 9-period differential. That's that green line there, but that's also those little vertical bars, the red one's down and the green one's up. That is the 0% line, and the histogram is actually called. So now your question is specifically?
Yes, please share with us, with strong MACD behavior and price movement as we see in this particular case, how what percentage of the time do peak C rallies fail to get to leg Ds?
Okay. Now, I'm going to make a statement here. I often do this, and I often discuss it in my Master Trader series, and I've done it on air, and I've done it in many of my webinars. And I make it real simple, and what I say is, in a bull market or a bull phase, the majority of stocks are going to have at least moves to the upside that could get you in the daily chart at least to a D, but it could recycle to an entirely 2 or even 3 full buy modes to at least a D. That means you don't have to be thinking of Fibonacci. You don't have to be thinking of volume. You don't have to be thinking of Chapman wave or anything. They are going to go higher because if you are correct in assessing that the tide is turning and the tide is moving higher, the majority of stocks will move higher. But when you get down to these smaller time frames, what are you going to do? Because you can have waves that go counter to larger moves. That's really the issue. Now, your question is, so the answer to your first question is, it depends on the tide. Because if you go to March of 2000, 93 maybe percent, if not 95% eventually of stocks move to at least a D. So it's an unfair question, but it's a very fair question in the market of life, because we do not know at any particular time whether or not the trend is going to be sustained, whether it's up or down. You have to just do your analysis and assessment. Now let me give you some other statistics, which is really what you would like to know. When you have come from a previous, I call it the Grand Canyon, a sharp cascade, as the E-minis back on the 13th were at 1867, and they plunged straight down to 1834, went sideways, and then went to the low of Sunday night to 1823. You can fail at any one of those peaks. But, John, if you can hold on, I'm going to explain what I'd be looking for and why I'd be looking for a potential new high in the 30-minute chart. Can you hold?
Thank you, I'll hold.
Great. I'll be back, folks. We're looking at Chapman wave in a 30-minute chart of the E-minis, and I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating and investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
The E-mini, this is the 30-minute E-mini, and the question was, what is the percentage, the likelihood that when you've gotten to a peak A, then a higher peak, in this case it would be B, of course, and then the next alphabetic letter in sequence is C. What are the chances of getting to a D? And my answer to that is, if you can get to a C, the opportunity and the probability of getting to a D is very high. One of the reasons being, well, there's two reasons. It depends on the chart pattern. If you're at new recovery highs and you have to really look back a long way to find where the left side high was, this could be fresh, and it could be a momentum move that allows it to automatically go to D. When you're underneath a previous high, in this case the previous high was at 1867.75 on the 13th of March, the big thing here is that there was no resistance. There aren't any troughs on the way, any peaks on the way down that reverted to an H pattern or a way of identifying on the left, if I had to draw a horizontal line, where there was a resistance point. So that's number one. Number two is, when you're under a previous peak, I call it the Grand Canyon, and it's so steep, sometimes it can take a little while to build that kind of energy to get to the D. So in what I call, in the Chapman wave methodology, the term that I use is a retracement failure mode. But that isn't a negative. It's an explanation. It's an explanation of where you are looking historically back. Historically might be a 10-minute bar or 15 or 20. But most importantly, what we're looking at here is that there's a very good chance, because the MACD is still strong. I'm kind of concerned that the stochastic is so low at 66.71. But wait a minute. That means that if it does turn around and the stochastic's able to rally and rally back to over the 80% line, then there's just a really good chance you're going to make that D. So very often, if you're looking at the price holding up, but one or maybe both the technicals are weak, you have to consider where you are in the waveform, because if it's at C, you might get a high-level consolidation, and then suddenly it spikes up, and in this case, 25 cents above the 1855.75 high will start leg D in the 30-minute chart. So the answer to your question is a majority of the time. That's not 51%. When I say majority of the time, I'm talking about between 75 and 85% of the time. I'd probably even put it into the category of 85% of the time. If you get to a C, you will probably make a D. But if you fail at that C, it's very negative, and you can go diving down towards the lows if it becomes what I call a peak C minus. And you usually know that because the last most important trough, in this case, it's not 1845.75, but it's this one down at 1840. It made it 9 o'clock. If that's taken out, then it's probably going to go deeper to the downside. So the answer to your question, a majority of the time, but a high majority of the time. Now,
well, that explanation is very helpful. I thank you for going through that. Might I just ask you in parting, if time permits, by the close of the day, if you might review your current conclusions on that U.S. Treasury daily chart triple yield deal that you do. If you don't have time, I understand, but I wanted to put that out there.
Oh, okay, yeah, that chart. All right, I will do that. I'll have to get this. It's on another. It's in another window. I will get it. Yes. Okay. So I hope that answered the questions. And now what I'm going to do is this: when we were looking at the E-mini, I just wanted to show that there's a pattern here. It's that expanding falling axe formation. If these two trend lines, expanding trend lines, if you see a push in the E-minis above 1862.50, I'm going to have to say, whoa. If there's enough effort, I'm going to be watching really closely the high of the 13th at 1867.75. Because between that and the 1875 high of the 11th, those are the peaks that are really important. A break above it would say, you could really make a U-turn to have a double top formation towards the 1880.50 all-time high. As I'm looking at it now, I'm suspecting that underneath 1861.50 is going to arch over, that you'll get maybe leg C in the 120-minute chart. The last two peak C's failed. That's what I was telling John, that you got to recognize the tide. If you are on the way down, peak C's are bound to fail. Oh, I should have mentioned that. Sorry, John. I just wanted to clarify what I said earlier. When I spoke to you about the tide, and I made a big deal about the tide, but I did not say that on the way down, very often you will fail at a B and a C, a B or a C, to make that arch formation that I call the H formation. Let me just go to my CD and I'll explain what that is and what it looks like. So this is going to be, this is chapter 17, I believe. Let me just find it here. Chapter 17, dreaded H pattern, and this is the pattern that we're looking at. That pattern that looks just like a lowercase h keeps making a lower low. Eventually it can go to an H that forms an M pattern, lowercase m. So those invariably fail either straight away at an A, goes to an A minus, or it could even extend to a B and sometimes a C minus, but actually it's A or B, and then you go to an arch formation and fail. So that's what I wanted to show there. Now, there are a couple of things that are really important right now. If you look at the TLT, you would anticipate that the TLT, which is trading at 107.98, down 54 cents, could not make that requisite leg D. That's going to be very interesting. Why? 105.60, let me just type that in. 105.60 was the most recent low of about a week ago, 5.60. But wait a minute. There was a previous low to that, and that low was at 105.62. So we've gone to a lower low. I did not see that over the weekend. I was looking at it, but I didn't actually do the numbers, and that's really important. In my work, those 2 cents below say that this is a brand new leg A up, and the previous was that what I was calling the C- failure. That's exactly what we saw in the TLT, which is the Lehman 20-year T-bond fund. So let's take a moment here, and I'm going to do some work with these different things. So let's go to the USM 14. USM 14 is not updated. Why did I not update it? I'll go to the US continuous contract. That's fine with me. So the US continuous contract did not make a lower low. Oh, I've got a divergence here. Looking at the weekly chart, I had drawn this pattern some time ago. The H, which I said could very well go to an M pattern, and it went to a leg D. I did not see that. It went to a leg D in the weekly chart. That last high last week was in fact D. Now, normally at D, I'd say be careful, because anything can happen at Ds. You could continue higher. You could have your sharpest decline. But in this particular pattern, all you would need to see is that continuous contract of bonds. So this is at 130.28, and the actual contract's at 130. So the June contract is about a point away. So just keep in mind, this is a point higher than what you'd be looking at. So if the high of 28, the high of last week, the 14th of March, is taken out this week, it extends leg D. The MACD is good. The stochastic's at 79% and improving. If it did take that D, then you would see the stochastic at 80%, and that would be good. Higher bonds imply weaker yield. Weaker yield often coincides with a weaker market. And the dollar very often, it hasn't, in this case, the dollar's been going down lately together with the market. Very often in the past, the dollar rallying would be a negative for the stock market. But we've not seen that relationship here. And if I look at the dollar is desperately trying to find some support. And I don't know if it'll find support and test until it tests. I'm looking at the dollar index trading at 79.35. It's within 2 cents or something of the contract itself. So 79 was the round number low in the in the index itself back on the 25th of October of last year. That's going to be key. A close below that in the weekly chart, certainly in the daily chart, but definitely in the weekly chart, a close below it would say, wow, dollar, you better find some support right now. Because in that 78 to 79 area, there's got to be a decent spring up to the 79.95 9-period moving average. Now, wait a minute. The euro itself has gone to a peak E, and is acting very well today and, in fact, Friday. It's holding the 9-period moving average. Here's another technique that I love to use. The 9-period moving average. That 9-period moving average, look at that. I call it walking the 9 EMA. And because it's doing that, look at the MACD fast-moving average. It just touched the slow-moving average, didn't break it, and then it rallied again. That's that break right there, that consolidation after peak C. So the euro hasn't given a sell signal yet because it's made a peak E, but it's acting very well. And I'm not going to fight it if I don't have any technical strength to say, no, if I don't have any technical weakness to say that the move here wasn't complemented by strong action. It has so far. So this is going to be a very interesting period with the euro so far just making a high-level consolidation after peak E, recovery high, leg E, possibly peak E if there's no new high this week in the weekly, and the monthly chart still in leg E, having traded out of the declining inside track resistance level. So I'm looking at this and saying, as far as I can tell, The MACD at 81%, the MACD is very strong, and the stochastic at 81% is saying that 1.359 is going to be absolutely critical for support, and it's trading at 1.392 in the euro-dollar currency pair. And so far, that's very good action. The month is not finished yet, but good action is good action. Now, what about the USD-JPY? USD-JPY, currency pair, that's the dollar Japanese yen, made a peak D. This is perfect for what I call the Eiffel Tower A pattern. So it goes straight up, and then it comes straight down. And because it does that, I've got to consider, let me go, 48, we'll make it 48, and it doesn't even have enough room. That is the pattern we're looking at. The last low of 101.194 made on the 3rd of March in the USD JPY was almost tested on Friday, 1.101201, and today's action bounced off it, but it hasn't made a new recovery high above the high of Friday. So I'm watching this real closely, but this is the area where there better be support. Otherwise, what does it do? It's probably going to make an arch formation and test the low of 100.749 made on the 4th of February. So that's that. Now, they've got another thing that I wanted to look at. The USD JPY did the VIX. Oh, man, I said to myself, I've got to get to that today. Did I write it down? Oh, yes. I want to look at the relationship. You know, you've got the Dow and Dow theory. Now, over the years, the decades that I've been listening to Dow theory, I have to tell you, I've got an inside joke. Some people know this well. And whenever someone says, "Oh, I've got an inside, I've got a Dow theory buy signal because the Dow and the transports are at all-time highs," together, I'm saying to myself, uh-oh, time to look to see if you've got a sell signal. Well, that has occurred in the IYT, the iShares Dow Jones Transportation Average Industrial Fund, Index Fund, sorry. There's a leg E, a very quick D to E in the weekly chart. I'm sorry, in the monthly chart. The weekly chart went from a D to a cup formation, slightly high above the 135.93, high at 136.94. That's $1 higher, 136.94. And that is saying that there's a chance that we're making some kind of a double top. And if we are making a double top, you won't know until there's a very quick and very sharp pullback under, 133.61 was the double bottom low on the 12th and 13th of March. A break under that, and you start to fill the gap below 131.99 that was made in the 4th, and the day before with a high of 131.44. So that's 50 cents and 54 cents. And I'm watching that closely because at any point by Friday afternoon this week, a close below 130, I'm going to call it 133.50, I'll be watching. Now, what's important, you've got the 7th of March. Do you remember in January, I think it was around about the 14th, the Dow of 2000 made its high? It was 3 months later that the S&P and the semiconductors and the NASDAQ made its high. Well, December 31st, the Dow and the IYT just the other day. I'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi everyone, Basil Chapman. As we wrap up for this last section, I just wanted to say that the IYTS, the iShares, Dow Jones Transportation Average Index, high-level consolidation. Now, what I like to do sometimes is I just pull the chart out so you can see the real big picture. And you're just looking at chart patterns, you will see that there was a cup formation, and then there was a breakout. I call this the Chapman Wave Cup and Ladle breakout, which often goes to a D or an E. Well, it went to an E, but I don't want to overplay this by projecting stuff that just I don't see in the chart. What I do see in the chart is that the fast-moving average of the MACD has not yet crossed negative. It's got that little dolphin pattern right there. That means that there's just enough room to make an M pattern, which would spike the IYT just a tad higher. Doesn't have to be much, but I'm watching real closely the 136.89 high of the 13th. Because if it breaks that, then 136.94, the all-time high, is going to be vulnerable to being pierced. That is, if it holds, because they might just pop up and come back down. But the stochastic is at 71% is turning down. And unless you get that strength in the weekly chart to push much higher to about 138 above, nicely above the 136.94 high, that MACD will not cross positive. So I'm watching this and I'm saying, okay, these are the things that I will look for. I'm not going to anticipate them. So I have no trade in the transportation average index right now. I will put on a trade if I see that there's a potential for failure. But I will also say, you know what? A break into the 137s, I must respect it. Now, that would imply that the Dow theory is suggesting that there'll either be a divergence or that the Dow will then follow the transports higher. Now, let's just have a quick look at crude oil before we wrap up. I'm looking at the June contract, and crude oil has pulled back from a peak E. You know, how many times are we looking at? Let me just do the continuous contract. It's a little clearer. Look how many, it's a peak D there. Look how many times you've got a D. In the crude oil, you've got it over there, peak D top. You've got it again a second, peak D top of the 200-period moving average. Then you get it again on the 3rd of March at 105.22. And now it's making a lower low. This is leg C to the downside. Well, that's why maybe we're looking at the transportation index as having some strength. Now, one of the things I looked at the other day, just before we wrap up, was the XAL. And I said the XAL, when I go through all the airlines, many of them are very toppy. XAL is trading at 78.01, made a peak D on the 7th with a high of 79.88. That's just less than 2 points away. But the pattern says, yep, you might make that falling X, but watch out if instead there's an arch formation, and at any point in the next 2 days, if the airline index takes out 77.22, it's probably going to retest the low of 76.17 and break it. And that weekly is a little bit like the transportation index in that I can call it a G/C. It might have recycled high with an instant restart, but at the same time, I'm going to let it play out. I'm only watching the transports right now. We do have a position in we short one of the airline stocks, doing okay. Hasn't managed to bounce much at all today. But in fact, I'm watching it, and we'll just play it by the visuals and by the technicals as I see it right now. And that's going to say that if the XAL decisively takes out 78.41, I have to be prepared to see the 79.88 level tested in a kind of a V shape or a cup formation. And that, if it makes a new high, will then become a D in the weekly, which says, oh, be careful, you're coming to a D. So it's funny how these things work out. So in the meantime, don't forget, I'll put it up one more time just as we're going to wrap up. I've got a webinar coming up on Thursday night. You can sign up for my opening call. You get a monthly. That's very unusual. Usually it's 2 weeks, but you also get my MACD and Slow Stochastic webinar, very important webinar. It's coming Thursday for free. Thanks for being here. I'll be back tomorrow, and have a great day. Stay tuned for Darryl Martin.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.